Hi there, this is Crypto. Okay, I hope you're having a great Sunday. So, I want to talk about the Bitcoin price today because there's a few things that have been knocking around the internet, people discussing various indicators and signals some people think that we're going to go down to, 10K or something like that, and some people think we're going to reverse. Now, I just want to show you a few reasons why I think it might reverse. And maybe also I'll show you a few things why I think it perhaps wouldn't reverse. Of course, the most obvious thing you can see here is this could be a bear flag, kind of like that. And if that breaks down, then, the place it could go to would actually be somewhere around like 10.5K. If it does go down there, I shall certainly be buying as much as I can, maybe without selling major body organs, but it certainly would be an opportunity if it does that. But there are reasons why I don't think it will do that. Now, the one everyone's talking about at the moment is the hash ribbons indicator, and you can get that on TradingView just by typing in hash ribbons. Now, the best way to look at this is to look at it on the chart with the most data. And I'm going to go for the BTC USD Bitstamp. Bitstamp or Coinbase, I think they both got quite a lot of history. Bitstamp one goes back a good 10 years or so. So that's worth looking at. Now, I don't entirely know how the hash ribbons indicator works, but if you want to find out, watch Eric Crown's video from this morning, where he talks quite a bit about the hash ribbons indicator. It's all to do with the hash rate that the miners get for mining Bitcoin. And when you get these blue circles here, that's a buy signal, and it's been quite reliable. Now, the thing is, I'm looking at this on the monthly chart, and funnily enough, I don't know when I drew this to kind of McDonald's M, but whenever I drew that, I was right, wasn't I? It came down tons after that. Anyway, so this isn't very interesting on the monthly chart at the moment because we haven't got a blue circle. And if we put it on the weekly, we still haven't. But if you put it on the daily, we've got a blue circle there. Now, the last time one of these appeared was August 2021. I remember that very well. And after that, we saw a increase, so about there, and then it went up to the all-time high. So it's a 67% increase, that was. The one before, in November 2020, I remember that. That's when I first got into Bitcoin properly, and I was delighted because I'd bought it. I think I bought it in the summer for less than $10,000. So from the blue buy signal in December 2020 up to the next all-time high, that went up 245%. And if we look at ones before, so for example, we get one in July 2020 when Bitcoin was under $10,000. So from there to the next all-time high was 707%. To the all-time high, that was over 800%. So it seems to be a fairly reliable indicator. Although the thing to bear in mind is this doesn't always happen straight away. So for example, in August 2021, it went up a bit more, came back, and then went up properly. The one in November 2020, it did go up decently, then it retraced, went up again, retraced, and then went off to an all-time high. So I wouldn't expect a straight vertical boner from here. I think it's going to be a wiggly path up, but I do nevertheless think it's going to be a path upwards. Now, the other thing that makes me think it may go up is the MACD. That's the moving average convergence divergence. You can get it again from TradingView by looking for MACD, MACD, and it's this indicator here. Now, recently it's not been particularly brilliant because what I normally look for when the red is crossing into the green, so when it's going from negative to being positive, and you normally get quite a nice little pump, but that kind of pump there was pretty pathetic. But in the past, say for example this one here on the 12th of August, the pump you got then, so it kind of crossed over there, and then you got like a, you know, 3 or 4% pump then, and then say for example this one here on the 15th of August, 2 o'clock in the morning. So that's about there, and that went up 3.5%. So that's pretty good. Okay, so at the moment this is looking on the 1 hour chart, and the MACD is still positive at the moment. However, if I change the 4 hour time frame, okay, what can you see here? You can see here, looking back in the past, this is actually a bit more reliable. So say for example when it went from negative to positive there, that was that pump from about here to about there, which is 15%, which is quite hefty. Now what's happened this morning at what time? 5 o'clock this morning, the 4 hour MACD crossed over into positive. Now what can happen sometimes is this bar might go down, because this candle's still got 2 hours and 26 minutes before it closes, so that if that went down all of a sudden, that candlestick would go red or pink again, and then that would be invalid. But for the moment, it looks to me like it wants to go up. Now if it does, what we can look at as well is what used to be called the VPVR, which now seems to be called the VRVP, which is the volume range visual profile. It used to be called the visual profile volume range. I guess they wanted to have volume range first, but if we look at that, that's over here. Okay, so you can see here where these kind of nodes are. So you've got this kind of node here, right? This is kind of where the price kind of gets attracted to. So you can see that's why it's been around here, and the next level is up here at around 23,000. Okay, so this area here doesn't have much volume, which is why when it pumped up there, it went very quickly through that area, and why when it came down, it went very quickly through that area. I think they call them inefficiencies or something like that. But anyway, these areas of low volume you see on the VRVP are where the price tends to move very quickly. And you can see that in the past. For example, there's this big area here where there was not much volume, and when that came down on the 11th of June, that was very, very rapid. And that was the one where quite a lot of people got completely screwed, including all my principal traders that I was copy trading, which is something I'm going to look at in a moment. And continuing with the principle that the higher the time frame, the more reliable the indicator, you can see here that on the weekly time frame, back on the 8th of August, the MACD on the weekly crossed from being negative to positive. So that was an incredibly good sign back on the 8th of August. And you can see in the past, say that happened on the 28th of March, when it had a nice pump up afterwards. And then going back before that, it happened on the 16th of August, 2021. We had a fantastic pump there, all the way up to the all-time high. And then, going back even further, this one in October 2020, this one went, let's measure that. That one went from there up to this high, which is 483%. So to me, there's a lot of things that are looking very positive at the moment. Maybe the other thing worth noting is the fact that the funding rate on ByBit is still negative, which means most people are going short. And as you know, what tends to happen is the market likes to F up the most people. So it's highly likely that there will be what you call a short squeeze when the price goes rapidly up to liquidate all the shorts. I'm hoping that's what happens. I am actually long at the moment, but I'm slightly underwater, so I really do want it to go up. So regarding my copy trading, about a week or so ago, I decided to give MDX Algo a go. This is Max from MDX Crypto, Now, I believe he's using a bot for this, and so far I've only been involved in one trade. It was this one here that it was a long from 23,594 and it closed at 23,937. So not an amazing long. It made 51 bucks. I'm trading with a capital of about 757. At one point that was like $180 in profit, and I was tempted to close it out. I didn't, but you know, that's how it is. There seems to be some confusion, and it does involve me as well, about what we should set the parameters for copy traders. Now, I've generally got leverage 5x. I think that's okay. And the way this works is if the trader uses like 10x, you'll be still using 5x. So there's less chance of you getting licked. If he uses 2x, you'll be using 2x as well, even if you've set this at 5x. So order cost, I mean, I just set that for pretty much however much I've got. Now, I've realised since then that some traders have multiple trades open at the same time. So if you have a trader like that, it may well be worth considering to lower your order cost. And I'd probably divide it by the amount of average orders that the trader tends to have open at the same time. So say if you've got a guy who tends to have like 3 trades going on at the same time, and you've got $1,000 to play with, make this about $300 or something, 330, whatever. The trading profit and stop loss, I tend to leave those up to the trader. I don't know if that's a good idea or not. I mean, I'm kind of doing this partly as an experiment and partly because I believe they may have a better strategy than me, even though I believe this one in particular is only a bot. Now, there's been some good comments on my channel. This one from Dynamic Piano Streams, who said, had a live chat with ByBit. I think the issue is that for any principal trader you copy or follow, the funds in your wallet must be able to accommodate 10 consecutive trades opened by the principal trader, even if he opens it all up in one day. Else you will trigger the auto removal from that principal trader. What Dynamic Piano Streams is talking about there is when you've got less than $10 to open a trade, you get an email saying you didn't have enough. If you keep doing this, we'll remove the trader. Now, I don't know if that happens if you've still got trades that are active. I personally don't think it does, but maybe it does. It's not happened to me yet, so I don't know. They went on to say, for instance, if you have $100 in your copy trading account, you may have to set your order cost to like $30 if you think your principal trader does multiple trades in a day, say 3 trades. Okay, I agree with that. On the other hand, if you set your order cost to $100, 100% like what I do, and your newly followed principal trader opens 2 trades where he used $80 for one and can't get enough funds in your wallet to fix the second trade, you will be auto-removed from the follower, though the active trade will remain open until it is closed unless you decide to close manually. Okay, well, I'm yet to see that, but if that's right, that's something you really need to look out for. But you do get an email to tell you about this. He says, I guess you were lucky always setting up your order cost to 100%. Okay, well, the reason I'm doing this is because if you look at MDX Algo, so he has got spaces free, by the way. He doesn't trade that often. I mean, I'm not in a trade at the moment. I think maybe that's a good thing. If I was looking at the market today, if I'd be in a trade today either. So maybe it's a good thing. So if we do a view here, there's been a couple of ones that have been negative, but they've generally mostly been positive. And it seems to me by the frequency of it that he's only really trading BTC USDT. He's actually doing it on 1x leverage, which is super safe. So I'd probably say if you want, slow and steady wins the race, MDX Algo might be one worth going for. And particularly as it's not in a trade at the moment, if you kind of join up today, follow MDX Algo, then you will be in the next good opportunity for a trade. And to me, I'm surprised it didn't go into a trade when the price was below 21 grand. So I guess the bot is waiting for something even lower, which is probably a very good thing. Other comments worth looking at is this one by Wandering Minstrel. He said, trying to get his head around it. So the amount of positions a principal trader can open at one time is 50. Okay, I don't know that for sure, but if that's the case, that is interesting. If the maximum amount of each trade is $1,000, that means at any one time there can be $50,000 at play at one time, also depending on leverage and if you had that account size. I had to adjust my position amount for each trade to much smaller amounts so that when the trader I'm following could open multiple positions, I could follow all of these trades all at the one time. This means I could be missing out on larger gains as I'm not sure of the number of positions that the trader could open at one time. But over the long run, this is a much better risk management strategy. I'm dividing my account size by 50 now, and that will be the amount of the order cost of the trade, as sometimes my trader opens up to 40 trades at once. Thank you for your copy trading updates. Okay, so that's interesting what Wandering Minstrel is saying there. If that's the case, then that's probably a pretty good strategy, really. Just if you find one of them traders that does do that many trades. Personally, I would worry about a trader who had 50 trades open at once, because, I mean, I can't keep my eye on the ball with like 3 trades, let alone 50. So either there's a bot doing a lot of the work, which may or may not be a good thing, or they've got a kind of team doing it, which I can't totally imagine. But who knows? And this is what I don't like about the copy trading is, I'd like to actually see what trades have been set, what the position is, what the actual leverage being used is, and, if the margin gets added to, or if there are multiple entries, this kind of thing. I would love to see all that, as if there was like, somebody leaning over my shoulder doing it for me, I would love to see all that, and I'd probably find it quite educational. But with the ByBit copy trading, you are a bit blind. So I'd suggest overall, don't use tons of money. Certainly don't use money that you need. Do it as an experiment. But to me, manual trading is far, far better than copy trading, just because you can manage your own risks properly. And if a trade starts heading south, you can decide whether to bail out yourself, or if you're going to somehow try and save that position by adding in further orders or adding to the margin or other such techniques. Anyway, since I started recording the video, it looks to me like this MACD going positive on the 4 hour for Bitcoin is going to hold. So hopefully we will see the price come up to maybe this level of volume there, and then it might roll back. I don't know, but it'd be nice to see it to get up to the 23.5k, that kind of level, at least. Just if you get away from this low area down here, and hopefully we will see some sort of reversal and it will come out of this channel like that. Bear in mind, this is actually a bear flag like I described, so there is a possibility that we could drop out of here and thoroughly shit the bed. So on that positive note, let's give the video a like, leave a nice comment. I've enjoyed your comments so far. Some are very, very useful, so do keep them coming. And ones where the questions I haven't quite answered yet, I will kind of do those in a later video and do like a kind of roundup of the good sort of comments that I've got, the good questions, and if I can answer them, I will. I can't promise I can answer everything because I'm not an expert and this isn't financial advice. I'm just showing you what I'm doing. Okay, so with that understood, please make sure you're subscribed and you've got the notifications set on all. Try and share the video with your friends, and while you're there, tell your friends.